Hi, welcome to the CLS Monthly Market Review. I am Rusty Vanneman, the Chief Investment Officer for CLS Investments. And with me this month is Case Eichenberger, Client Portfolio Manager.
Hey,
welcome,
how's it going?
Case.
Good.
Great.
Good.
We have a lot of stuff to talk about.
Absolutely.
Yeah. This is a monthly market review, though, so let me talk about the markets real fast. And as you know, and you talk and write about all the time, what a crazy great year this has been.
I know, it's amazing.
And as we're talking, it's not quite month end. We have a few hours to go, but it looks like it's going to be another positive month for the markets.
Yep.
We still have a chance. This could be the first year ever the stock market will have a positive return each and every month.
Exactly.
And of course, volatility is really, really low.
It's gone.
And I know. So it's been a phenomenal year. And it's been a great year to be globally diversified like we are.
100%.
International markets are doing great. The U.S. market is actually one of the worst performers in the whole world this year. And it's up huge.
Yeah,
so it's just been a great year. So everything has been really, really good.
Everything's roses. Yeah, right.
Yeah. One thing that I wrote about, that I'm writing about right now, is some other things. You're on the road all the time. I'm on the road all the time. And as you know, one question we always get when it gets to Q&A, and somebody always asks about real estate.
Yeah.
Real estate's local. We all know that. They're really talking about residential real estate. And but there are some interesting things going on there right now. And first of all, the data has been surprisingly strong of late. You're starting to get an upswing. It looks good, and it's kind of been flowing into even better prices. So one thing that I found really interesting is that inventory, the amount of supply that's out there, is really low. And so first of all, that kind of hurts sales a little bit, particularly at the lower end. But one thing that it's doing is pushing up prices.
Yeah. I think we've noticed that locally here, really.
Well, it definitely feels that way here in Omaha. It feels that way everywhere right now.
Yeah.
But the one thing that's going to say is that it's going to flow into core CPI and inflation numbers, which have been really, really low.
Yes.
And as you get housing, doing its thing, it's going to flow into rents. And rents are almost, they're about 42% of core CPI. So you'll definitely see that. And again, a question we get all the time is about real estate investment trusts.
Yeah.
How often do you get that question?
Pretty often, and usually it's talking about open-ended funds when we talk about it, or a lot of people already have real estate, like you said, in their houses. So do they need more? I guess that's really the question that we're talking about here.
Well, and again, we're always educating.
Yeah.
You're educating, I'm educating. And the thing is, a lot of time REITs, real estate investment trusts, they're not really a place on residential housing. There are those, but most of them are about commercial real estate. Sure. Sometimes they're investing in properties, sometimes in mortgages. It's an area that I think this is really interesting, and it's going to be in the write-up. I think this is a great example of how CLS Investment thinks about an asset class segment, and I'm writing it, is, real estate, for a couple reasons, has not really been super attractive to us. It's been expensive in relative terms, and the risk characteristics have been freaked out. Now, when they've been freaked out for years, it doesn't make any sense, but the risk characteristics are settling down, and it's now actually relatively cheap. First time in almost 10 years.
Yeah.
So are we buying yet? Not yet. Yeah, exactly. Well, the overall market's about 4% real estate. We're about 3% in CLS portfolios right now. Some might have a little more if they have a little more income orientation. But the momentum, the technicals of real estate are not great yet.
Correct. Yep.
So once they start to improve, we're buyers.
Might be looking at it.
Yeah.
For sure.
So anyway, it's in the write-up, and so it's something to look at. The one thing that can impact, of course, is tax reform. That's a big issue right now.
Yeah.
I don't write about it a lot. It's even today, and the thing is, it's really tricky. And how do you handle the questions on political bias and trying to talk about politics?
I try to set it aside for the most part, because we've talked about this a lot. Like, political bias doesn't really impact markets too much long term. It really doesn't matter who's in power right now. So you try to set it aside. You try to sidestep it to some extent. Obviously, it's very important to end clients out there, but for the most part, for fundamental decision makings on the portfolio management team, it's not a huge part of it.
You know what I find? First of all, everything he says is right. I think political bias hurts investors and hurts their returns. I have seen it, and actually I write about it in the commentary. So that's a tease for all the listeners here to actually read the commentary. The reason why you're here, though, besides your good looks and great suit, of course, is your commentary the week before was great. And First of all, you went on a trip. Tell us about that trip.
Yeah, so I went and had the opportunity to go on a trip to Guatemala, which is not something you really think about as far as tourism capital of the world. But this was a different trip. This was a trip with Habitat for Humanity, something I've been trying to dip my toes into more and get involved with more. So I talked a little bit about that. Obviously, the trip was great, helping out poor families there in poverty, building them healthy stoves because respiration problems is a big cause of death.
So like 1/3 of the deaths or something like that.
Exactly.
Right.
So we helped with that. It felt good, and we did a little tourism on the side, but a lot of that was truly, well, for me, stepping out of my comfort zone. It's going to, not a country you go to a resort with. It's working with a bunch of strangers. Even though they were local here in Omaha, they were still just strangers to me. So talking a little bit that and focusing that more on emerging markets, I still think clients...
Stepping out of your comfort zone,
yeah,
right.
Stepping out of your comfort zone with investing is still very difficult behaviorally. I looked at a portfolio the other day that was all U.S. stocks completely. So I think we still have a long way to even get to international. Taking that one step further to emerging markets is even more difficult.
You had some great stats on EM. So how much does a typical U.S. investor have? How does that compare to the world benchmarks?
Right. We've seen 5%. Of their equity portion.
First of all, I thought the number was even lower. So I believe your number's more the numbers in my head because people have been buying a little bit. But yeah.
Yeah, and this may be a little old data, but 5% I think is still in the ballpark of if you polled people out there. Obviously, the benchmark data is between 11, 12, kind of depending on what you classify as an emerging market country or not, of course. For us, though, obviously, we are proponents of that. We don't try to take behavioral issues. We want to put that aside and focus more on fundamentals, valuations, technicals, everything that goes into our CLS score. So emerging markets has been a big part of our portfolio.
Let me change gears. So you wrote about, and you always write about this topic, you're just fascinated by it, the dividends.
Yeah. Dividends.
Pros and cons of dividends.
Dividends, taxes.
Yep.
I think it's something that we obviously all have to pay taxes. Do we like doing it? No. If I could show you a way to lower your tax bill, would you be interested? Probably. And dividends are kind of, it's really shown in the data that dividends after taxes in taxable accounts, you're worse off typically by investing in dividend-oriented funds. But that's the rational side of it. All things else equal, we should not be doing that, right?
But we're human beings.
We are human beings.
We're emotional.
We are emotional. And anybody you talk to, I talk to a lot of my family members about how they invest. They love those dividend checks from whether it's an individual stock or a fund. They love those dividend checks. And we've done just a simple study between the gap between total returns of a fund, of dividend-paying funds, and investor returns, which is kind of that behavior gap. We've noticed the behavior gap typically is lower with dividend-oriented funds, which would suggest logically that people hang on to them longer and don't chase
So
performance.
even though it's irrational, emphasizing dividends usually create a better investor experience. And that's part of our education again, is that we're always educated, and that's why you wrote about it.
Absolutely. So I think we're somewhere in the middle. I try not to take a stance too far either way, but just educating that if you can get behind the behavioral side of it and set that aside, let's look at some other things besides dividends and taxable accounts.
Last thing you wrote about was one of the classic books to read, and great Christmas idea for people. It was a book from the 1950s. I read it a while ago. Tell us about the book.
I just read it, How to Lie with Statistics. It is written in 1954.
By the way, I think that title is, it's basically for the reader, how not to be deceived by statistics. I think is a better title for it.
Yeah, exactly. It's not like, how to sell cars to the public or anything. It's basically how you should be arming yourself with this knowledge so you can pick out a bad statistic from the crowd. Not necessarily you're going to pick it out every time, but try to be skeptical with it. So I try to riff on that a little bit with more topical industry things that I see on a day-to-day basis when I go to conferences, when I view presentations, things like managers using a benchmark of price return instead of total return. Dividends, again, are a big part of the world of investing. They should be included. Clients get those. Also, back tests. Who doesn't love a good back test?
Right.
Usually works fine. We look at back tests also in forms of like ETF indexes because those are rules-based, they don't change. But as far as active managers, really tactical managers, a back test, in my opinion, doesn't do you that much good.
I hear you. Yeah.
One of my favorite ones, though, is using model performance showing it gross of fees. I've seen some offenders of this out there where they're showing this, and And you really need to put net of fees and gross of fees side by side.
Yeah.
That's guidance from the SEC. That's guidance from GIPS, which we adhere to, of course. But also just model performance. I mean, if it's not tied to actual live client data, in our opinion, you should really take it with a big grain of salt.
The book is very easy to read, and it's
Yeah,
a great
it's a short
tip
one.
for the holidays, too.
Yep.
So, awesome. Well, thanks, Case.
Yeah, thank you.
And thank you for your time and trust in CLS Investments, and happy holidays.